Hello traders, Gary Wagner here, just about 10 o'clock in Honolulu, 4 o'clock in New York on Thursday, the 24th day of April, 2014, and this is the daily report for gold and silver. We have a nice showing with moderately to strongly higher pricing across the board in the precious metals markets as tensions again begin to unfold between the Russians and the Ukrainians, and it seems as though the accord which was in place is beginning to disintegrate. 1292.50 current print on the screen puts it up about $8 to $9 on the day. The high just below 1300 at 1299.90 and the low at 1267.90. Silver also showing a nice spike up today, actually up about 1% or 20 cents on the day, 1964. That is our current print on the screen. The low has been 1886 and the high 2001. This market has been all over the board. You can see that on this daily candle right here. More on silver towards the end of the show. First, let's talk about the signal that we generated today when we sent out a special trade alert, a buy signal on gold. So first, to our signal, what precipitated the signal and what I am looking for at this point. We did issue an aggressive buy signal this morning on gold, and I want to differentiate, as I did in the trade alert, the difference between an aggressive and a conservative buy signal. My feeling is that this is actually a good place for everybody to get in, but typically what you look for in terms of a straight candlestick pattern is that you get a confirming candle. Now, a confirming candle on this kind of a pattern would be that the following day, because we're using a daily chart, would have a higher high, higher low, and it'd be a green candle, something like this. It could be anywhere in the range. But in essence, this is what we're looking at. As this marketplace came down, we talked about the fact we had these series of red candles. We had really no real indication that we hit a bottom. We were also looking at the possibility of the market coming and retesting the 61% retracement level at 1262. Yesterday, if you recall from our show, we talked about the fact that we got that pivotal doji. And that pivotal doji could be a setup for a three-river morning star or morning star variation. And the reason I say variation is because you can't get a true star in a spot market or a continuous market because the open and close are one tick away, so they carry it over. But this is as close to a star as you're going to get in a spot market scenario. So we did get that. We got the doji. It was a slight update. You can see that it's green, although color, body color isn't really what's important. It's the fact that it was a very, very small body. Today, we've got this large green candle with a higher high. We certainly don't have the higher low. A crazy day in the market. As you can see, it's been really all over the place. Hit a low of 68.75. And so initially I had said to place a stop below today's low, and I believe that I put in writing 1260. This is the actual low, 1268.75. Your stop should be below that. It could be at 65. It could be at 64, somewhere in that area. But you want to put it below this low. Conservative traders wait for the first signs, but if you start to see this candle forming tomorrow and going green, go ahead and enter the market, because here's my sense. The first thing that we realize is although we have not, let me change my color here, although we did not line up and hit this bottom as we thought we might, 62, call it 62.63, we certainly came within $5 of that when we hit this low today. So in essence, when we are looking at this retracement, and let me go ahead and kind of blow or condense this a little bit so you can see where this comes from. But really what we're looking at is as follows. As this marketplace moves up, we are looking for approximately a 61% retracement. Well, traders, I really think we got that, and we came darn close, if not right there, very, very close when we hit these lows today. The fact that we hit the lows and we had a double bottom just prior to that, in that this marketplace, we had this low right in here, and then this low right in here. They kind of matched up. We did absolutely go below that today. The trading range is undeniable. However, to me, we still had, in essence, we had a double bottom. Then we went and tested the 61% retracement level. We did that all under the confines of creating this pattern. This is the pattern that unfolded in gold, which is that Three River Morning Star. All of that coupled together, the fact that we came close to the retracement level we were looking for, and we had the development of this pattern that we thought could unfold, to me, that really signaled the potential for this market to turn around. Now, there is renewed tensions in the Ukraine. There's skirmishes going on, and it is going to be a market that is driven by rumor as well as fact, but we could see some extremely volatile markets ahead. And so that's the only caveat. That's the only thing we want to kind of pay attention to and look to. Traders who took this trade, you're in somewhere around here. We sent that out. The market was trading roughly at 1291. It's now at 1292 and change. So you should be in the market somewhere around here. Stop should be below 1268.75. So traders, I've gone ahead and blown up the chart we had been using. This is that 320-minute chart. I've blown it up and converted it into a straight candlestick chart, because really what we're seeing here is, you can see this defined range that we had. Markets trading in a defined range. It comes in and makes this extreme low here. This is at 68, but you get that engulfing bullish, and a very, very strong one at that, that opens in that area but closes well above that area. And now the next candle that's forming is now above that and is now trading to highs that we had seen, because we have seen these highs right here, but is back into this higher territory up here. Traders, I do feel that there is the opportunity to see this market move higher, and that was the reason we sent out that special trade alert this morning. Now, traders, we talked about the fact that anytime you use the Japanese average charts, they are always going to lag behind any of our standard candlestick charts or candlestick chart pattern identification, simply because they're based upon averages, and averages will always lag. When we look at this chart, and I want to go ahead and let's remove this one study so we can see the current candle. When we looked at the daily, you saw the Three River Morning Star come out. Now, when we look at this particular chart, same daily chart, but what we're seeing is you've got that downtrend. We talked about yesterday, although the candle was getting smaller, we didn't have our final clue or indication. We got that today. Look at this candle here. This Japanese average candle is that pure doji, and it wouldn't surprise me, as we saw here, for either another day of green, small doji day of green, or to just start going green and moving up. Because traders, that's typically what we look for as the market sells off. Now, the fact that it exceeded and went below this initial bottom, this double bottom that we identified, that's interesting. We have had a whipsaw and a crazy day in terms of a range, but I do believe at this point it is safe to enter the water from the long side. And in the same way, when we look at, this is a standard candlestick chart, this is a 2-day chart. We have been focusing in on two prongs, the 23% and the 0%. We came close, just as we came close with the 61% retracement, just falling shy. We now, on this double candle, or double day candle, I should say, have a nice green candle. And I would expect this market to start to take off. And the real question is, will it have the energy to break above this zero line? Because that will really tell us, in terms of technical evidence, that there's a high probability that we've now entered a bullish stage and we have exited the bearish stage. In other words, any kind of uptrends that we're seeing, rather than it being a counter trend, is a true bull trend. And of course, you notice that I did not send out a recommendation on silver, and there's a reason for that. One, we haven't had any concrete proof. We've seen a nice update, but this market has just been all over the board. And when you consider the fact, when you look at the different ranges that it's been in, where it stays in this defined range, as opposed to having a defined spike or an uptrend such as we have seen in gold, I really want to see a close above 1958. We're certainly looks like we're going to get that, but I want to make sure that it just doesn't start to trade within this defined range and kind of lock us into a market that really can't break out of range. On this, I do want to wait at least another day for confirmation. This has been Gary Wagner wishing you as always good trading. We'll talk to you tomorrow for the weekly wrap-up and review. Bye-bye.